Hello, and welcome to the Max Revenue Show. I'm your host, Trey Shields, along with the Zen Master of Commercial Insurance, Micah Salas. Micah, how are you this morning?
Excellent. My power's on, so I'm happy.
Great. Nothing too cold over there in your neck of the woods?
No, it was definitely freezing. It still is, but the ice is finally melting, and I have power. So, it's not like it was 3, 4 years ago when we lost the whole grid, and we're struggling a little bit. So I'm happy.
Very nice. All right. Well, today we have a guest with us, Mr. Trey Griffy. He is a HOA specialist, writes a lot of business. Have gone back and forth with him over the years, and bringing him on today to kind of pick his brain on how he did it, what it's like now, and how he's trying to scale to the next level, and then how he would do it all over again if he had to start from zero tomorrow. So we're going to get into that, but before we do, shout out to today's sponsor, Insurance Xdate. Generate leads, win new biz. Insurance Xdate is where new business begins. Industry relevant data delivered on a software platform built for sales, not research. Identify and engage with prospects in minutes, keep track of your opportunities, and get production done. Work comp data, EB data, they've got it for both sides of the house. Go check them out. I also talked with Rob, and he confirmed that he'd be okay with us doing this. We are looking for another sponsor. EB, probably, side of the house. So if you're an EB, InsurTech, SaaS, uh, captive, broker, whatever, uh, hit us up. We're building that side of the house now too, and we are taking on an EV sponsor. So that's what I got. That was my amazing segue. Let's get into Mr. Trey Griffy. I think the most important question that everybody wants to know is did you know that you have the same name as the son of maybe the greatest baseball player of all time?
I did. I was really hoping he would pan out more in the NFL. He got a couple of years though. Got that practice squad league minimum. Is probably doing okay for himself. Certainly better than I am. So, hey, good for him. Good for him.
Now, here's the question. Does Micah even know who we're talking about?
Ken Griffey Jr., man, come on.
All right. All right. You never know.
I was born in the '80s. I mean, everyone knew Ken Griffey. I played baseball actually all throughout. I just got bored of it. That's the whole reason I got out of baseball.
Yeah.
But
Where
yeah,
did his kid play at? Where did Trey? He was with the Cardinals, I think, for a little while.
He did he go to Arizona? Is that where he went? College, Arizona?
I think so. Maybe he's listening. He can correct us.
He's definitely not listening. I can guarantee that.
Cool.
So
Cool.
you're an avid Florida fan. I'm seeing the stuff in the back. How'd you end up in Charlotte if you're a Florida fan?
Yeah. So it's funny. I'm actually born and raised outside of Atlanta, so I'm not even from Florida, but my whole family is. Both my parents are alumni, so I kind of grew up going to the games. Come by it honestly. It was fun there in the middle 2000s. It's been rough for the last couple of decades, but we got the basketball natty last year, so we still got basketball. I guess we're officially a basketball school. So yeah, we'll take what we can get these days.
I grew up watching I was never a Florida football fan, but I watched. You grew up on the Mike Millers and the Jason Williams and all those guys. The Billy Donovan era was wild.
We were elite there. Yeah, Billy. There's a reason the court's named after the guy. So yeah, we miss Billy.
And I think Al Horford's in like his 35th year in the league, right? I mean, the guy just won't retire.
I tell you what, I'm not a big NBA guy, but I was watching. I don't know if it was a Christmas Day game or what it was, but I turned on the TV and sure enough, Al Horford's still in the starting five. He's still doing it. He's older than I am. But God bless him. The man's he'll never die, I guess. But good for him, man. It's good money if you can get it at that age.
he's like that old agent that just won't retire. And the client's like, "Hey, just give him one more year. He's 80. He'll retire." And then all of a sudden, you're waiting there 5 years of following up. The guy's hanging out. It's like, come on, dude.
Yeah. Just let it go. Just let it go.
Yeah.
All right. Well, let's start. Let's get into the meat and potatoes here. First part, let's go into your origin story, how you found this crazy industry. Somewhat abbreviated, like we don't feel like you got to spend 15 minutes on it, but just tell us how you fell into the industry, and then we're going to kind of dissect the first couple of years. So, what's your origin story into the insurance space?
Yeah, so I graduated from college, kind of middle 2000s, when the job market was still kind of coming up out of the recession, and so there wasn't a lot going on. I couldn't even spell insurance. I didn't know what I wanted to do. Graduated with a marketing degree. Stop me if you heard the story before. I think a lot of insurance guys fall into this bucket, but anyway, I had an opportunity to move to Minneapolis, and just through a friend of a friend, whose father happened to own a property management firm. So this is kind of going to roll into what I'm doing now, but it's just funny kind of how serendipitous it is when I look back on it. But I moved to Minneapolis to take a job with my current agency. I've been with them for 14 years now. Nesbitt Agencies. We're out of Minnetonka, Eden Prairie, Minnetonka area. I started out just as your basic green producer. Again, not knowing anything about insurance, but I happen to work for a really good group of folks, family run agency. It really invested in me and taking care of their people. I apprenticed under. Well, we can get into that here in a little bit, but that's kind of how I fell into insurance. Moving across the country for a job that didn't pay a whole lot of money at the time, and kind of looking to get my feet wet. I was young and single and saw an opportunity and took it.
Nice. So you mentioned somebody took you under their wing. Let let's talk about this first 1, 2, 3 years, kind of the crucible here.
Yeah.
What did that look like?
Yeah, it was tough. It was a grind. I think anyone would attest to that. As a new producer in this world, it's challenging. But I was really fortunate to get plugged in, kind of apprenticing under one of our agency's largest agent, or one of our largest agents. He had a pretty big hospitality book, so a lot of hotels, that kind of stuff, amongst other things. But hospitality was the big thing. And I basically, gophered for him for 3 years, doing applications, submissions. And this gentleman, he's now retired, but very detail oriented guy. Had a lot of relationships. Really value the importance of those underwriting relationships. And through that, I was able to develop my own relationships with those same people. Learn how to put together a heck of a submission. I always joke with my underwriters that I could do a lot of things wrong, but I could put together a set of Accord apps better than darn near anybody. So that's kind of how I learned, and kind of how I still operate today. But I didn't write much business at all during that time. My goal was really just to be a sponge, soak it up and learn. So I had opportunities to write, an odd or an end account here, just generalist kind of stuff. And I did, but that's not really what I was doing primarily. I was really just soaking it up and learning everything from this much more experienced seasoned producer.
Did you feel I always wonder this when people take on that apprenticeship role, because I think that's an awesome way to do it. But what I always internally feel, well, like if I was to do that, like that underlying anxiety, like, man, I got to write some business, I got to validate, like the years are just kind of ticking by. I'm curious, what did the agency, how did they structure it? Like, did you have that fear, or was it kind of like, hey, man, don't worry about anything for 3 years, and then we'll just kind of start you at that?
Yeah, I think it speaks a lot to our agency that they're very patient with their people. You're not going to get in there, miss your quota, and be out the door, the next day. Um, I think they evaluate talent based on potential, not necessarily immediate results, especially for the young producers. Um, they had nothing to go off for me other than a recommendation, that this guy might pan out, and to their credit, they were patient. So, yeah, the expectation genuinely was to learn, to soak it up, and once we turn you loose, to go out and hunt your own business, then you'll be prepared. So to their credit, they did not put me under a tremendous amount of pressure. Now internally, I had I myself was feeling the pressure. That's just how I'm wired.
Sure.
But and it wasn't easy. I wanted to go out and light the world on fire day one. And it just didn't happen that way for me. I know we hear a lot of stories, and you've had guys on here that I know have found success, even after a career change. They jump in and they light it on fire right out of the gate. That wasn't me. I had to pay my dues. It was a grind. Um, but yeah, like I said, looking back on it, the way I did it, I wouldn't change it for the world, because I learned a ton from the team I was working for, the gentleman I was working for.
What was the validation number, if you don't mind sharing? What was that original pay, and then what was kind of like the number you had to hit to prove you could stick around?
I mean, I'll tell you right out of the gate, I think I was making 22 grand a year. It was a different time. It was a different
Yeah.
time. Like I said, tough job market. So I was just looking to get my foot in the door. So I wasn't making much. So validating wasn't a tremendous, revenue
Hurdle.
challenge. Yeah. So no, man, I like I said, when I say I moved out across the country for next to nothing, I did it. And I've lived it. But yeah, for me, I guess the internal metric was, it wasn't so much a revenue dollar. It's like, hey, I want to make $100,000 a year. That was. And again, I think, inflation might have a say in that since that time, but that was my number, man. I wanted to make six figures. And I grinded my tail off writing whatever I could. I know we're going to get into the habitational stuff, but for me, it was like, all right, I want to hit six figures. That's my goal. And then, we'll reevaluate from there. So, it took me a few years to get there, but when I did, it was pretty cool. And the agency recognized that. And, I talked about my goal, and they had set expectations for me that were similar to that. And I did it. I was proud of myself. So yeah,
How did
that's not a perfect answer to your question, but yeah.
how did you stay the course mentally? Because like that's probably between the ears, I think is probably the hardest part in this deal. And I know you said you had that internal instinct still, but how did you stay mentally the course? And then also, was there anything that your mentor was telling you where you're like, you kind of just had this natural inclination, like, nah, I like a lot of this, but I'm going to change this 20%.
Yeah. So probably a better question for my wife than for me, but because she saw the good, the bad, and the ugly, mostly the bad and the ugly for those first few years. Well, she's my girlfriend at the time, but she stuck it out with me even when I was scraping by. I would say yeah, it was a challenge, man. I'm the kind of guy, I'm wired that I want immediate results. So this was kind of backwards from how I had always done things and how I wanted to do things. Because that wasn't happening. And it's not as though I wasn't trying. I was busting my tail. For, like I said, not a lot of money at the time. But and it's funny, I'll tell you honestly, I came to my boss, who's the owner of the company, who is I consider to this day, I look up to him more than anyone in this industry. I tried to quit 3 times. I went to him and said, "Hey," I had that conversation. I said, "Look, I'm looking at moving. This just isn't working out." And what he said to me was, and this is why I have a lot of, amongst many reasons, but why I have a lot of respect for the guy. He says, "All right, well, I'm going to put on my friend hat, not your boss hat right now. And I'm going to tell me about the opportunity. Let's walk through it together. Is this going to be a fit or a bad fit?" He goes, and we did 3 different times. And he said, "All right, I understand why you want to leave. I get it. I don't want you to, but let's walk through this." And he did. He was able to put aside his interest, the employer-employee relationship. And he said, "This is why I wouldn't do that. And here's why. It's not that it's necessarily guaranteed failure, but here's some of the pitfalls I see that I wasn't seeing." I kind of had tunnel vision thinking, well, this is out. I'm out. This isn't working. I'm making a change because immediately I want those results. I want that guaranteed paycheck. And if you're looking for that as a young producer in this field, oftentimes you're barking up the wrong tree. And that's what I was doing. But he was able to bring me back down to earth, talk some sense into me. And ultimately what he said, Mike, to your question was, look, give it 3 more years, is what he told me. Give it 3 more years. You're going to start seeing results sooner than that, but you're going to hit that mark in 3 years. And once you hit that, the sky's the limit. And almost to the T, he was spot on. Exactly. I hit that 3-year mark, and the line graph was just a hockey stick from there. So to his credit, and I talk to him about this all the time. We laugh about it now, but man, I'm a lifer, I'm a lifer. And to his credit, he followed through on every one of those promises. So yeah, it's a core relationship for sure.
That's awesome.
I don't know if you know this, but I would say 95% of the people listening to this podcast, when they hear you say that, that's not their experience. So I don't know if you realize this or not, but the situation that you're in is very rare. And them to give you that leash and to the encouragement and to let you go out and fail and to keep you around, because I think the industry average now is like, hey, here's 150K draw. You've got 3 years to bring us $500,000, and if you don't, you're out. By the way, if you're not pacing there after 18 months, we'll cut it even sooner. So you had a hell of an opportunity there. Do you realize that looking outside into the other parts of the industry?
I didn't at the time. I do now, and that's another reason why I respect my company even more, because they had that patience. They actually had the vision, um, again, based on nothing. My resume was crap at the time. I just come out of college. Drinking beer and skipping class, and they take a chance on me just off an interview saying, "Hey, I think this kid can sell." I wasn't even convinced I could sell 3 years into the job, yet they stayed the course. They talked me off the ledge multiple times, and they convinced me to stay, and to their credit, I'm doing great now. Um, but yeah, Trey, I do recognize that, and I've recognized it more as I've gotten older and older, and I think the industry has shifted some, and to more of that cutthroat results, results, results. Um, and I get that model works. I'm not, it absolutely does. Some of the larger corporate agencies, 100%. I understand that model. It wasn't the route I took. I took a bit more of a, if you want to kind of call it an old school handshake kind of approach, just based on the relationship employer employee, and it really worked for me. That's something to take a lot of pride in, and I recognize how rare that is. So like when I'm going out and hiring, I use that to my advantage when I'm talking to young kids out of college saying, look, I'm assuming you've interviewed at X, Y, and Z shop in town because everybody does. Um, Here's what I can offer. Here's what they can't. Now, I can't come out and offer you necessarily a sky high salary right out of the gate based on nothing, but here's what I can offer you long term. That's the way my employer handled it with me, and that's the way I want to handle it with my folks moving forward.
So let's fast forward a little bit. When did you start to hit your stride? I think we all kind of have that part in our career where it just kind of starts to click. And we
hmm
start to say, "Oh, I can do this." What
hmm
was that for you? Was that when you kind of settled into your niche, or were you a generalist for the first couple of years? When did things start to click, and then when did you kind of start to carve your path into the habitational space?
6 years. 6 years was the number for me, and I remember that vividly because there was one quarter of my 6th year in the industry that I said, "Oh, this is this is this is starting to come to fruition." My boss was right. Like it's hitting. Um, so it was like I told you, I apprenticed for about 3 years, and that was really tough. And like I said, I was writing, bits and pieces here and there, contractors, retail shops, retail operations, and I was doing some habitational. Again, I think I mentioned I had some family friends that were in that business, so I kind of started doing a little bit of that, cutting my teeth there, and found myself drawn to that. After that apprenticeship, I guess it wasn't a formal apprenticeship, but you know what I mean. After I started going on my own more, I started just organically gravitating towards the habitational side of things, and I found that I really enjoyed it. It just clicked; it made sense to me. Um, at the risk of sounding cliche, I think I enjoy solving for problems. And there are a lot of misconceptions in the habitational world. And there are a lot of generalist agencies or excuse me, agents that will go out and quote, a large condo building, condo association, or large townhome community. And they'll get insurance coverage put up or put in place, but it's woefully inadequate for that particular type of risk. So I saw a lot of that. I was able to basically, do a policy review and identify really quickly. I know this is standard procedure for most producers, but I got really good at that when it came to these community associations. Um, and it was really able to bring value to the table. And once I started doing that, really diving into this, doing a lot of reading, understanding kind of this niche that I found myself gravitating towards, that's when those relationships that I'd been building over time with some property managers, property owners, that's when that really started to take off because you're like, oh, this guy actually knows what he's talking about. This is, he can bring more to the table than, maybe my direct writer agent that I've been with for 20 years just because he's, a bowling buddy or something. And that's really when it started to take off for me.
So you're so okay. So the first, let's say the 3 years after being an apprentice, right? You
hmm
said you developed some relationships. Is that kind of what was your strategy like when you're just like, okay, I'm done being an apprentice. My boss just told me give it 3 years. What were you doing? Like, what did your day to day look like? And if you had to kind of put a percentage on it, how much was cold calling? Like, what were your numbers like, or drop ins, or networking events? Like, what did it all look like? Just
Yeah.
kind of share some of that.
So I'm a little bit of a, I cold calling in the habitational space is a little bit different. It's a bit tougher in that you're working with these HOA boards. These are like, lot of times retired folks that are neighbors of yours living in your community. I mean, I'm sitting in an HOA in my home office right now. And if the board's listening to this, no, I will not serve on the HOA board. But, but it's a little bit different in that there's constant turnover in these boards. There's people that, are there one day, then gone the next. So it's tough. And there's really no super reliable database that has this information, again, because it's turning over all the time. So with that, cold calling is a little more challenging in this space. So what I did, some of the things you just mentioned, Mike, or what I did, I went to a ton of networking events. I went to some of the industry trade association events. I hosted a lot of lunch and learns with property management companies. So property managers are the gatekeepers in this world. They're the ones that manage, portfolios of 300, 400, 500 associations. So ultimately, that's kind of the keys to the kingdom. You need to get to know these folks. And it's not just getting to know them, bringing them lunch and that stuff. You actually need to forge these relationships with them. To me, and my property management friends out there, I consider many of them personal friends now. We've been through the ringer together. We just came out of one of the hardest markets we've ever seen. And we made it out the other end. So for me, forging those relationships was critical to my success, but at the early stages, it was tough. Who's this young kid that, doesn't know insurance, from the next guy and having to kind of prove that actually knew this stuff, basically just getting at bats, going to these events, doing these lunch and learns, speaking at conferences, things like that, to kind of build that credibility and that brand that establishes myself as a subject matter expert in this field to get in with these property managers and get in with these boards. So for me, yeah, it was a lot of literally just boots on the ground prospecting.
It's cool. Did you find, and then so fast forward, then you said it started to click, that first quarter of your sixth year, but you're really your third year kind of being out there. So is it basically then now become like you have such a strong network of property managers where it's like you wake up on a Monday and you got essentially, 3 deals in your inbox, people looking to talk to you, or what's that kind of look like now?
Yeah,
or what's it look like since then, I guess, would you say?
Yeah, so never stop prospecting, right? So I'm never going to sit back and just live on referrals. That's a recipe for disaster, in my opinion. But yeah, a lot of it is. Another thing I should point out, that the habitational space and anyone that operates in this world knows that they're shopping every year, and I've tried to preach and preach and preach. That's not the best. You're shooting yourself in the foot, all the things, right? I'm screaming into the wind at this point. I realize that. So you're going to get shopped every year. Now, that also means that they're shopping the other guy every year too. So I'm getting constant, opportunities. Are we going to write them all? Absolutely not. But a lot of them we do. So there is kind of a self-fulfilling pipeline in that of prospective referral business. But at the same time, you can't stop prospecting. I'm always looking to forge new relationships with property management groups, with HOA industry groups, to get in front of decision makers. Now, like for me now, that's in the past year or so, I've kind of picked up the content creation on LinkedIn. That's been a new thing for me that I hadn't touched literally in a decade. And since I've done that, the whole purpose and idea behind that is establish a brand, establish kind of like I was doing at the outset of my career, establishing myself as an industry subject matter expert. That's not a sales tool for me. I mean, look, if I can get some referral opportunities off it, that's great. I'm not going to say no, but the idea is, look, if I'm prospecting on somebody and in my email signature, it says, check me out on LinkedIn or connect with me on LinkedIn, they click on that and say, oh, this guy knows what he's talking about. Okay. He's not just some green guy that's trying to get my business. That establishes credibility. So that's been a new kind of venture for me over the past year. And I've seen, frankly, I don't know why I didn't do it earlier. But it's been great. So yeah, a few different ways. Yes, referrals are great. I do quite a bit of business off that, but at the same time, always be closing, right?
All right, let's get to the big question everybody wants to know. What is the book size currently? How many deals do you write a year? And what is the average revenue size?
So book size, I'm about 1.1. So I'm over 1 million. Cracked that not terribly long ago, but that was a big milestone for me. Average revenue size, I would say, well, how many deals am I doing? shifting right now. The market's crazy. So I would say, um, 4 or 5 new deals a month. I'd say 3 to 4 deals a month. They're not huge revenue size though. I'm talking,
Probably 3
10 to
grand.
20. Nah, I'm doing probably 10 to 15. 10 grand revenue would be a decent account. Some are smaller, some bigger. But on average, I'd say that's probably a fair range.
Got it. So I talked with a guy last week or a week before that was in the faith space, writes a lot of churches and nonprofits. And
Yeah,
I
I
was just
saw
asking
that
him,
episode. Yeah, that was a good one.
like that's the politics and the like board of elders or whatever you have in a church sounds very similar to like all these HOAs. Like how do you navigate the politics and the he said she said and the 10, 12, 15, 20 stakeholders? I'm sure at a lot of these places there's a guy who lives there. He wants in on it too because he's a broker. So like, what's that like?
Man, it is. I got stories. It's wild,
Reality TV
man.
show?
Oh yeah, I've been to board meetings that they have to have an armed police officer at the door. It's. I'm not even kidding. I mean that actually happens. It's wild. So I will say, preface this with the overwhelming majority of associations operate, in a very efficient, mature manner. But there are ones that don't. So navigating that is a challenge. So Trey, like you mentioned, sometimes there's a competitor that sits on the board or another broker that sits on the board. Now, I will say 9 times out of 10, I end up winning that deal. Again, being a specialist, not tooting my own horn, puffing out my chest, but there's usually more that I can bring to the table, not necessarily in terms of pricing, but just in general risk management knowledge unique to my niche that I can bring to the table. Then, some of them might specialize in, I don't know, construction or something else, that frankly I wouldn't be as good at. So,
Yep.
So those are, I've had plenty of opportunities that I've done those, and they're kind of fun, to be honest, navigating those politics. But there's other situations where it's you have folks fighting about things that, I mean, you wouldn't even believe. Just literally just go look at your neighborhood Facebook page. Stuff like that is what's getting talked about in these meetings, and I'm just the insurance guy. I'm just the insurance guy.
I've seen those memes.
But it's challenging. Yeah. Well, I was gonna say so. Everyone knows an insurance guy. We all know this. So when I'm at a board meeting, Karen, probably the worst possible name to pick, but call her Karen. She knows her brother's cousin, whatever, does insurance, and she wants to give him a shot. And no matter what he brings to the table, she's going to try to put her foot on the scale and kick and scream if he doesn't get it. So we see that all the time. And there's been times where Karen wins. Karen puts her thumb on the scale, and Joe Blow wins. And those are usually accounts that, I'll get a call back from a year or two later saying, "Hey, let's take another look at this because we're struggling." We get that a lot. And there's other times where I think pre-qualifying in this world is really, really important. Identified. I don't need the practice. You know what I mean? Like I don't need the practice at this. I'm in this to write business and help you operate your business more effectively. So there's plenty of opportunities that we have to walk away from. And that might be because the rate is such that we just can't touch it. That happens, just as it does anywhere. Or, frankly, the agent is doing a good job, or on the flip side, the agent is not being honest with their client, and the client is putting more stock in those lies, then they might want to listen to me for. And I get it. That's their trusted advisor. Whether or not he's trustworthy or not, we don't know. But that happens too. So those again, I don't need the practice. I want to write business. Those are opportunities that I don't really care to go too far down the road on. So pre-qualification is really important in this business.
How? I mean, I think that's a great point you hit on, because let's be real. I mean, depends on what industry you're in, but some people, I've done the solo AOR play. I love it if you can go that route. But since I've actually brought back in quoting, it's uncapped and unlocked a lot bigger revenue years. I mean, just to be honest. But of course,
Sure.
you don't want to get careless with that, right? It's so I was curious, what is your closing ratio, if you care to share that, and then what have you done to improve that? I imagine, like, I know you said pre-qualifying, but what does that look like specifically? And then one other back end question is, how efficient have you gotten at quoting? Because you can get pretty efficient where if you know what you're doing and you're in a niche, I would think you can probably get out. If you got your markets locked down, you could probably make it like an hour-long process, maybe 2
Yeah.
hours of you and your
Yeah.
team's time.
Yeah, I'm going to start with that question because that is something that I have absolutely become much more efficient at over the years, and that is just repetition. That's muscle memory and practice. So I've gotten to where, when I was first starting out, I'm literally sending them an app and saying, "Hey, complete this." And now I literally have a form bullet point email with 5 questions on it, saying, "Boom, boom, boom." I can at least get you an indication based on this. And from that point, we can decide if it makes sense to keep doing this or not. So I can get a pretty good indication within, literally within an hour if they give me what I need. And usually they do. So I've gotten much more efficient with that. But again, like to me, I keep saying it, but that's so critical because do I really want to waste my time and frankly the client's time going down this road if it's not going to work? It's just it's not good for anybody. So I tell clients, well, prospective clients all the time, and I'm not afraid of saying it. Like, look, you got a great thing going, stay where you're at. I say that all the time, and that to me, and I've had clients come back years later and say that built trust with me. Let's do this again. So I'd rather be honest with you up front and risk losing the sale than blowing smoke up your rear end and making promises I can't keep. To me, again, that just goes to building credibility long term. And you better believe it's a small world. Those opportunities very well could come up again when they're having a tough year. So that for me, I mean, it's so basic, cliche, but like just doing what you said you're going to do and being honest will set you so far ahead of the next guy, because it's just so hard to come by in today's day and age. So I went on a bit of a tangent there, but going back to, closing ratio, it's not super, super high in the habitational world. I mean, on a good year, 30% we close. On a bad year, 15, 20%. But there's a lot of opportunity. So it's a volume play.
Yep.
You know what I
Yep.
mean? It depends on the market too. Like over the past couple of years when the market was hard, I did really well. There weren't that many carriers in play. So I had access to a lot of markets that other folks didn't. And I had those relationships that I've been building up for the past decade with underwriters that, hey, they might be willing to stretch on something a little more than they might not, for the guy down the street. So the hard market was actually really great. I got really good at delivering bad news, which I genuinely hated because we were looking at, literally 100, 200% increases in some cases. But on the flip side, so is everybody else. So I got lots of opportunities to help folks that were dealing with that too. And we were able to onboard a lot of new business doing that. So habitational, I think just inherently due to the nature of the business, how often they are shopping, the hit rate, the quote to bind rate is not obscenely high by any means. I don't think and if anyone else is in this space, I don't think that's necessarily a bad indicator that you're doing something wrong. I think it's just the nature of the beast.
Yeah, that's a great point. Industry matters so much. Trey, you look like you want to ask something. He's coughing.
Cough button.
Yeah,
Yep.
I mean, every niche is different, right? There's so much nuance and everything. The thing that I was going to ask is I wanted to get into like the scaling part. How do you where you want to go, and what are the roadblocks preventing you from scaling to that? A lot of our stuff in the past traditionally has been for that guy going from 0 to 1 million, but now we're really trying to circle the wagons for anybody in the industry. So I really want to talk about with you, how do you go from 1 to 2, or how do you go from 1 to 5, and what's standing in your way?
Well, as I mentioned before, I'm kind of at that 1.1 mark, so I'm literally figuring that out right now. That's why I started doing the LinkedIn content, things like that. I'm trying to throw stuff against the wall here. For me, in my particular niche, property managers are your best friend. They can also be your worst enemy because each property management firm has existing relationships with insurance vendors, right? So they have their brokers that they work with. And as one of those, I respect the hell out of that. That's a good thing. But breaking into that, relationship is tough. So for me, it's funny what I've found myself doing in addition to the brand building has been kind of going back to the well. Like when I first started, is getting out and knocking on those doors again. Actually showing up, bringing breakfast to a break room, at some of my local management companies here in town, and saying, "Hey, give me an at bat. What do you have coming up?" I mean, just a really basic new producer playbook, and I've kind of found myself going back to the well, and I'm finding some traction there. Just there's nothing fancy to it. Because right now I have my existing relationships with my PMs, and that's great. Like that's going really well. That's going to continue to grow, and I'm going to continue building the business off that. But my goal is, now that I've kind of hit my first benchmark in my career, I want to take it up and up and up, and kind of like I said, I wanted to make 100 grand a year. Well, then I wanted to make 200, 300, whatever. So that's what I'm doing now. And for me, I've kind of found myself going back to basics, and just getting off my tail and actually knocking on doors again. I mean, literally knocking on doors, going into offices. I think FaceTime, I think it's one of those things that even in 2026 still can't be replaced.
Do you find this kind of ties to both things? One is, you find part A is, do you find a lot easier now, or you have a lot more authority, probably because you're exuding confidence, I would imagine, as a 14-year vet, right, with tons of a stable of probably 100 plus clients. I would think that when you're doing these drop-ins, like, it's just, you probably have so much confidence. But how do you specifically demonstrate that to, one, the property managers, but two, in a quote situation, I was going to ask this, is like you mentioned business knowledge or industry acumen. So that probably helps you win on stuff beyond just price and coverage even sometimes.
Yep.
How do
Yep.
you bring that up in a final presentation when you're presenting a quote, and then how do you bring it up when you're dropping in? Like, what are your ways you're demonstrating that?
Yeah. So one of the things I think I mentioned at the outset was, look, one thing I've gotten really good at is identifying misconceptions. And that's one of the things that drew me to this line of business, because there are so many misconceptions. Decision makers, boards making decisions on the wrong things. So when I'm going into a boardroom or whatever it looks like, and for example, and this is never going to change. Kind of like I told you, folks are going to shop every year in this business. They are, but in a nonprofit HOA board setting, price always wins. Okay. So, and that's something I've been looking to shift. And don't get me wrong, price is important. I'm not saying that, but it's not the be all end all. So when I can actually go in, and I used to be terrible at this, but when I can actually go in and genuinely sit with the board and show them that, hey, I get it, this quote is 10% less, but it's based on this, or the difference between your current 5% wind hail deductible and your 3% wind hail deductible is actually 250 grand back in your pocket in the event of a claim. That actually clicks on. You'd be surprised how many folks don't even know how to calculate a wind hail deductible, that have been in this industry for a while. Not brokers, but insurers that have been doing their insurance renewals for 10 years with a 5%, not knowing the real impact of that because they haven't had a claim yet. So when I can come in and put on a piece of paper, this is us, this is them. Do you want to save $5 grand now, or do you want to save 250 grand, 6 months ago, or 6 months from now when there's a hailstorm? That carries real weight. So I think when you said, over time I've developed the confidence and the acumen to walk in a room and really be able to communicate that and demonstrate it, that's helped me a lot. So like, I frankly did not used to be a very good communicator. Like, I still get even stuff like this, I don't think I'm the world's best communicator. I can talk, but actually being able to communicate is a very different thing. It's a very different skill set. And that's something I'm still working on today, but it's something I have been very intentional about. And it's something I've gotten better at as I've gone on. And frankly, a lot of that does come with confidence in that, hey, I actually am the subject matter expert in the room, where before I might have had some imposter syndrome thinking, well, do I even really belong here? So that has certainly helped a lot. Yeah, Mike, I know there were two parts to that question. I apologize. I just kind of went for it.
No, I think you pretty much checked the boxes. I mean, it was just like, how are you exuding, or how are you communicating that acumen? And I think you kind of mentioned that. I think just face to face and just having conversations with people, it'll just come on out, where a prospect will be like, wow, Trey knows his stuff. Yeah, he's 5% higher, but oh, this is why. Okay, now he's actually less if I take that into account, or you know what I mean?
Yeah. I had those conversations all the time. I was sitting on a board meeting at 9:30 at night last night, because that's how they roll. This literally happened last night. And the reason the deductible was in my top of mind is because that's what we discussed last night. We walked into the meeting. It was just a Zoom meeting, but we jumped on, and I told them, this is where we're at. It's a really good quote. And, immediately they say, well, our current agent, they rolled me. They handed it to their agent, said beat it, which we all know happens. So, first of all, didn't react to that, and I just kind of rolled with it. I said, "Great, all right, well, what's your deductible?" We did the math for him right there. I mean, I literally screen shared on an Excel spreadsheet and did the math for him on a building by building basis. And I mean, 2 out of the 5 board members, their jaw just dropped, saying, "I had no idea," uh,
Wow.
because their agent hadn't explained it to them. So, knock on wood, we haven't gotten the bind order yet, but as of last night, I think things were trending in our direction.
Yeah.
It's crazy to me how many different niches there are and how the day-to-day looks so much different from a guy, say, that does construction like Micah versus a guy like you that does habitational HOA type stuff. Y'all are in the same industry, but yet like y'all are worlds apart.
Totally.
And so I think it's a testament to I think the word is myopic vision as to like what it means to be a producer, because you hear somebody on LinkedIn say, yeah, this is the way, but like clearly in your industry it's a quoting game and it's a volume play and it just is what it is. So to like take a myopic view of like what it means to be a producer, I think is shooting yourself in the foot. Clearly you figured that out. Next, I was going to say, I actually think you're a great communicator, and I was going to encourage you to get on YouTube. You have a great mic. Your video's good, and I'm like, this guy's got to get on YouTube. So
I
I think you're
appreciate you
actually really
saying
good
that.
at it.
I've seen you pushing YouTube on your content, and I need to do it, man. I just need to take the plunge. I hate seeing myself on camera, but you might have just given me the confidence boost that I needed.
Yeah.
Yes, I'll talk to you about it off air. You got to do it. And then my
Great.
next question was, tell me about the service team structure and like what that's looked as you've scaled your book. Like, what did you start with? What are you at now? And what are the roles and duties between you and your service team as like how y'all split it up?
Well, it's just me and one CSR, man. Where and Barb, if you're watching this, my CSR, she is my right hand. I joke she's like my memory bank because I forget everything. But man, she's been doing this longer than I have, and she was working for a big brokerage house, so she got great training. She actually came from a transportation background, so very different from what I'm doing now. But when it comes to using our CRM and our documentation, which admittedly I could be better at, she is my rock. So she is able to manage. It took me a long time to, and this is probably I'm a little bit of a control freak. All right, so like we have an internal marketing team at our agency. I still do all my own marketing in house, and I probably shouldn't. I recognize that it's a time suck for me, but I also know that I'm good at it, and I know that I'm going to convey the right message and the right narrative to my underwriters. So, and I do actually, I mean, I firmly believe that myself having the relationship with my underwriters is critical. I have leaned on those relationships, asked for favors, and gotten things across the finish line many, many times, just because people know how I do business and I know how they do business. So, but to my service team, it's me and Barb, and she picks up the phone in the first ring, and she gets bombarded with more cert requests than you could possibly imagine, and she handles them with grace and authority. And I can't thank her enough. In fact, I should probably send her a bottle of wine after this.
Oh man, that's critical. I'm with you. I think there's this old stigma, and there's a lot of truth to it. A lot of older producers in the industry when I got into it, and kind of same time as you, but they just would. I hear the stories from some of these client managers I talk to. They used to work at other agencies, and they're like, yeah, this producer would come in here and just chuck the renewal on my desk and treat you just like dirt. I'm like, it's really kind of sad to hear about, but I don't know how they got away with it all those years. But it's wild.
Cultural, I don't know, man, but I've heard the same thing, and I've seen it. And like, if I lost my CSR, I would be
Hindered
in the wilderness,
Yeah.
for sure. I mean, I tell her all the time, I said, you better not retire anytime soon, because I'm going to have a problem on my hands.
Yeah.
But yeah, she's a rock star. So I to all the service reps out there, big props.
How do you so this goes along the line with what I had written down here about back to scaling a little bit, and in a quote heavy industry like you're in, and then kind of being a control freak, admittedly, like I think a lot of us maybe are naturally.
Yep.
I know it's one of my biggest challenges. I've gotten to this low ones spot a couple times, and it's like, how do I get to 2 or 3, or what do I want to even get to? So,
Yep.
but how do you balance retention scaling? You know what I mean? Because are you involved in the remarketing, or is that where Barb is just coming in and
Oh
handling
yeah.
all of that?
No. So I got to remarket it all. So I'm new business and renewal. Look, I keep going back to it, but they're price sensitive and they shop every year. So it's you got to be on defense too, man. There's always someone waiting in the wings, um, and they may not always be giving your insured accurate information. So you have to constantly be in your guard. Um, it's a challenge because it is time consuming, but I will say that I've kept my retention, well into the 90s every year of my career thus far. Knock on wood. We'll see how it goes this year, but so far so good. But yeah, it's a real concern, and that's not through just automatic renewals. Every single one of them is getting touched,
Yeah.
and it requires a lot of attention. So, Barb helps a tremendous amount with that. But yeah, I mean, I would say out of 10 accounts, I'm shopping 8 of them every year. And it's if it were up to me, I wouldn't do that, because it's just fundamentally, I don't know that I don't think it helps. However, it's become a necessity because that's what, the client base demands. Yeah, it's funny because I'm on LinkedIn. I see all the content, and it is very much, don't quote AOR. And I do AOR plenty of business too, so that does happen. But when you're dealing with 5 oftentimes ill-informed decision makers on a board, that becomes a bit of a challenge. So they do happen, but they're much less common. So yeah, it is still, whether I like it or not, it's a quote game.
Yeah.
It's a what have you done for me lately? And boards have a short memory. I could have saved them 40 grand last year, and they take a 10% increase this year. And Joe's cousin is going to come in and try to roll you.
Yeah. Yeah. Where do you want to get to? What's your end game? I mean, do you have you thought about that, or maybe that's kind of what's the next evolution that you're about to kind of undertake this
Yeah,
year?
yeah. I wouldn't say I've hit a number yet, but or hit. Honestly, I could say right now I'm at 1. My next number's 2. Let's hit 2 and go from there.
Yep.
I
Yep.
think every million, that's a good spot to reevaluate and see where it goes. Mm. But yeah, I think I'm not done yet. I'm still hungry. We're working on some stuff that potential programs, opportunities that could really help scale that. But in the meantime, it's opportunities like this, speaking with people, speaking with you guys, going to conferences, and just being the boots on the ground that I've kind of done for the past 10 years that I think are going to get me there. So
Yeah. Yeah. I think for some unsolicited advice here, and just from
I'll
picking up
take it.
on other top producers we've been talking to, and a theme, I'm in the same boat as you, and so I'm thinking like, how can I get here? And I think there has to be a delegation and a letting go of certain things. And so, I think this, but I'm just thinking, what if you could find someone to either offload your CSR, like an analyst or even an AI type program out there that can offload some of her time to free up at least your key renewals, where it's like you could start kind of training her to do those renewals for you, the
Mhm.
remarketing side, and then she runs them by you, and you're just like, yep, let's go, and then you just go present, right? So it kind of frees up that back end. Or you have like a marketing person that you just kind of mentor, you guys bring in, and maybe a designated portion of their time is used for your book, right? And you just bring them in and introduce them and really foster those relationships between that marketing person. That's kind of what I'm thinking. If I was just, not that I'm coaching you or anything, but that's
No,
from the
no,
outside
that
looking in.
look,
Those are some thoughts, of how to do it,
those
I think.
conversations are already happening.
Yep.
Yeah. So I've kind of started the ball rolling there, but yeah, I'm at the point where, not just for me, but for Barb too, to free her up a little bit. We both only have, I got 2 young kids and I coach all their teams, which is, it's a blessing, to be able to do that, but I want to be able to keep doing that. That's important to me. You can't get these kids back. So, yeah, the ability to do that and scale and really just focus on the endpoint sale and the client relationship would be huge. So yeah, we're actually having some of those conversations right now. I'm actively looking for the right person. So yeah,
There you go. If anyone's listening.
yeah, right. Yeah. If you're living in the Charlotte metro, give me a call. Be happy to talk. But, yeah, man, no. That's great advice. And believe me, it does not fall on deaf ears. I recognize there's some efficiencies that need some work to take me to the next level. And no doubt that's already taken place.
Mike has got this framework he calls free agent. In the industry, everybody, it's like, oh, top producer. And I mean, obviously we've thrown that moniker around on the podcast before, but it's like, it's the concept of, do I want to be a top producer or do I want to be a free agent? Micah, will you just kind of lay that out a little bit? And it's like, I think we all get caught in this trap of like growth for growth's sake, but at what expense? You
Yep.
know, it's kind of like that thing. Have you ever heard that analogy about the guy who's fishing in the boat in the Bahamas? And the guy comes to him and is like, well, you know, right now you've got one boat, but if we can do, I'll give you a little bit of money, then you can get to two boats. And then if you have two boats, then this. And then he's like, well, what's the point of all that? You know, because I'm already happy where I'm at. Why do I want to grow just to grow to put more on my plate? Because, you know, more money isn't the key to happiness. So, I mean, Micah, can you parse that out a little bit?
Well, yeah, it's something I've been thinking a lot about too, because you kind of get to that point, you know, where it's like, what is the point of just growing? I'm making good income. And I think there has to be a fulfillment side on the back end. Actually, Alex Hormozy just had a really good interview with Tony Robbins, and they were talking about that. I just watched it over the weekend.
I saw a clip from it. Yeah, I haven't seen the whole thing, but I saw some snippets. Yeah.
I highly recommend every producer go watch it, because Alex talks about feeling just like this empty kind of thing. Like, hey, I've hit it, right? Now what else do I do? And I think as a producer, that might happen, right? If you hit if you're like, hey, got to get to 1 million, got to get to 2, you might get there and realize like nothing's really different, and you're just making more income that you're probably never going to touch anyways. It just goes into some investment account, right?
Yep.
And that's when Tony comes in and said, you're missing the deal. It's got to be about the fulfillment side, right? And so maybe that is bringing in a mentor, and you're saying, hey, I got to 1 million by myself, but I went to 2. I got to bring in a young guy, and you'll get so much joy out of just helping him grow and repaying. I forgot what you said your mentor's name is, but kind of replicating that, right? So anyways, really good interview. But the whole concept of how I got to this free agent was like, okay, instead of being $1 million producer or a $2 million producer or a top producer, I just want to be a free agent. So what is that number that I need to get to at this point in my life? And it could change, where I can be free, right? And I have the ability to do whatever I want. I can coach my kids 24/7, or not 24/7, but every sport they're in, I can coach, and I feel a sense of freedom, right? And then I can kind of have fun and do what I want to do, and maybe choose to mentor someone, choose to take my foot off the gas if I want to do that, and spend more time with my family these next 5-6 years. And then maybe, guess what? I want to put my foot back on the gas. And so that freedom is invaluable to me. And so I think that that's really been my goal, is like, what is that number to where I'm a free agent? And I think this is one of the cool parts about working at an agency that's not necessarily a top 10, that's publicly traded, that's going to keep saying you got to keep producing X amount every year, is that these smaller agencies, what I found is, as long as you get your book to a certain size and you're not just sitting there doing nothing, and you're a good cultural fit, you can be a free agent, right? And I think that's one of the pros of doing that. And again, when I say free agent, I don't mean you just hit a certain number and then you just sit back and all your accounts leave you, because that will happen if you just take that mindset. But it's more like, get to that number and then just realize, okay, what's my biggest account? Maybe I'm just going to write equal to my biggest account every year. And so if my biggest account's 100 grand or 70 grand of revenue or whatever, or maybe my 5 biggest accounts, I'm just going to pick my top 5 and I'm going to write that every year. And that's just my goal. And I'm going to maintain this and then get the machine more efficient, right? So I can maintain this freedom. So that's really the thought.
That's really good, man. I love that. Like, not to take it off at a tangent, but that's kind of a season I've kind of been going through, working through some of those. I've gotten to a point in my life where, like, I'm 37. I never in a million years thought I'd be where I'm at 37. I'm not rich, but we're comfortable. My wife's able to stay home. I got 2 kids. I'm able to coach your teams. Like, I'm blessed, man. So I've been really like diving into my faith, diving into more time with my kids, being very intentional about these things. And that's been a huge game changer for me, like discipline, getting back into the gym, working out. Like, that's all stuff that for the last, 7-8 years, I had on the back burner, which is not a good thing. And I could feel it like in here, like something was missing. So I've really taken steps to dive back into that. And I'm not where I want to be, forever. Like, I still want to grow, but man, over the past couple of years, it's been so freeing to kind of have that mental paradigm shift and think like, oh my God, this isn't what it's all about. And you know what? Yeah, it's the oldest saying in the world, but money really doesn't buy happiness. Like, just, but the ability to be financially secure in a way that I can prioritize those other things, frankly, the way I should have been doing all along, has been a real eye opener for me. So, man, I could not agree more. And I think that's the free agent mindset. I really like that. I'm going to steal that. That's really cool.
Take it, man. Maybe I'll write a book on it someday.
Yeah, I think you should.
This is the good stuff. This is the part of the conversation. These are the conversations that I don't think are being had enough of, or at least put out there. So thanks for digging in on that. I guess my last question is, if I take you out of North Carolina and I put you on the completely opposite side of the country and you have no network and you know nobody, and I tell you you've got to rebuild it and you've got to do it in half the time, how do you do it?
That's a good one. Well, I think I take the model that's gotten me here specifically over the past few years. For me, that has really been niching down into what I know I'm good at. You know, take the skills that you have and use that to your advantage. Don't reinvent the wheel. For me, I know when I walk into a room with a condo board, I can confidently say that, okay, I'm the expert here. I know what I'm talking about. Nearly anything they throw at me, I can handle it. There are weird exceptions. I told you board meetings get weird. But I think, if I could do it all over again, I would niche down a little bit earlier. Like I said, I did do the generalist thing for a while. Like I said, I was making 22 grand out of college. I was just trying to write business to put food on the table. So I did that, for a long time. But if I did it all over again, I would do what it took to survive, but I would also try to niche down and I would read and I would listen and I would be a sponge. That's how I started my career. And to do it faster, I would, if I had to do it all over again and do it in half the time, I would listen, man. I would listen, I would read, and I would niche down to become the best agent, whether it's habitational, whether it's construction, whether it's whatever it may be, transportation, become the subject matter expert in the room. And when people can sense that, when they know that you're speaking from a place of confidence, that carries a lot of weight. No matter what you're saying, they know that you know what you're talking about and you're shooting them straight. So it took me a long time to get there because I didn't know what I was doing. But having done it before, I would do whatever it took to build that kind of credibility, that self-confidence first, so that I could exude it in a meeting with a client or a prospect. I don't know if that makes sense, but
Yeah. No, it does, man. Hey, I
great.
don't know if you got anything else, Trey, but I just want to say thanks, man, for coming on and being an open book. I think these kind of conversations, especially near the end, but the whole thing, are what people need to hear, right? So that's what we're trying to do, and I appreciate you. You didn't have to do this, and you got a million renewals probably where you're working on, and
1231's over now, so it's all
yeah,
good.
yeah, yeah.
No, man. I've been a big fan of both of you guys for a long time. I think what you're doing is I think it's, I don't know, both you guys, and Trey, I've told you this, but Micah too. I followed your followed your stuff for a long time, and like the brand building stuff on LinkedIn. Like I wouldn't be doing this had I not followed the model of what you guys are doing. There's a few other guys too, but you guys specifically have really inspired me to like this is embarrassing, Trey, but I'll tell you, like, we all use ChatGPT for stuff. When I'm prompting in there, I said, all right, I want this in Trey Shield style. Dude, I've done that before. I put in some of your posts, like, I like the style. I like that sounds lame and fanboyish, but it's not. But like, I just like the raw, the authenticity. I'm not trying to throw fluff out there. Like, the brand building stuff is just educational, man. I like just giving away education for free, and I firmly believe that will yield results. The harvest will come from just giving away free stuff, and I genuinely believe that. So,
Trey,
yeah, I appreciate you guys a lot. Hopefully, I didn't just stroke Trey's ego too much.
No,
I'm flattered.
You don't realize that my phone is going to be blowing up after this from Trey. Just his ego just went from this to, it was already this big. Now it's off the screen.
Cut this. Yeah. So I know if Trey's got the editing pin, he ain't gonna cut that. I know it.
No, we ain't cutting it. I think that's the good stuff. As my wife says, I'm a what is it? I'm a egomaniac with an inferiority complex.
That's great. I like that. But good. No, man, I appreciate y'all having me on, man. This is a lot of fun. You guys are easy to talk to, and the whole mission you guys are doing, especially for young producers that are Like, I hope what I said today about like literally trying to quit 3 times and getting pulled back in and finding success. I hope that if there's anything I said today, I hope that resonates with young producers listening to this, because look, you can find a way in this, and it might take a little while, but make it your own. And truly, the sky's the limit.
Before we go, I have 2 more questions and then we'll end it. They'll be brief.
Yep.
Number 1, I need the name of one top producer. It can be at your agency. I'd prefer it not be at your agency. A guy that you're friends with that has over $1 million book, is reasonably interesting, and is willing to give away the secret sauce. You got anybody off the top of your head?
I haven't talked to this guy in forever. Andrew Creary, Krause Anderson Insurance, Minneapolis.
Okay. Can
He's
you
an
make
old
that
buddy.
introduction?
Yeah, I'd be happy to. He's an old buddy that I haven't talked to in years, but I know he's really good at what he does. He's a good guy, just a genuine human being.
Okay, and then last question. You talked about a lot of good information for new producers. One of the things we really want to do is start serving the guys like you, right? That $1 million, $1.5 million, $2 million. Like, how do I scale?
Yeah.
How can we do that better?
Gosh. Well, first of all, I think you're already doing a pretty good job of it. I do take, you guys put a lot of nuggets out there that I've taken a lot away from.
If I'm catching you off guard, you can just think about it and then
you
DM
are.
me.
That's one I'd like to think on. Because I think that is I think there's a lot of people in that boat, and I think I'm glad you're thinking that way, because for me, like I said, I'm literally figuring out as I go. Let me think on that. Let me chew on that one, and I'll send you some bullet points. But yeah, man, that would be, selfishly, that'd be great if y'all start pumping out more of that.
Awesome. Trey, can't thank you enough, man. You're the man. We appreciate you.
Appreciate you, boys. Thanks a lot for the opportunity.
We'll see you.
Adios.
Take care.